Hey guys, how are you? So, coming at you from Greenwich Park, so have a little look. Nice little view. So, got a couple of things for you. I'm going to do two things. I'm going to give you the three things that you can do immediately that'll make you a better trader. I'm going to give you three bullet points that if you implement them fully, I mean absolutely fully, you will become significantly a better trader. You do these three things. And just before I do that, I'm going to just say I'm heading out to Australia for July, and I'm going to do a theory weekend, delivery of theory weekend in Sydney, right at the back end of July. So if you're in the east coast side of Australia, get in touch. You could participate in our virtual trading metamorphosis program for April the 22nd. And when I go out in July, you'll get the theory weekend again, not just virtually, physically delivered. So you'll actually get two theory weekends for the price of one. So if you are Australian, and now is pretty much a best time for you for contemplating coming on board with the trading metamorphosis program, assuming that Sydney's an easy enough place to get to. I understand it's a 4 hour flight if you happen to be in Perth. I will be around also in coffees and hookups and chats for people who just want to say hello. Can get in touch. I'll probably spend the better part of 3 weeks out there, and I'm working with Zahid, a student and event developer, for a different event as well, apart from the theory weekend. So get in touch if you're interested in engaging with myself or Zahid while I'm out there. I do have a brother out in Perth, so I might even pop out Perth way just to say hello to him for a short bit, although I have no events planned for that. So I'm not too sure what I'll do during the course of the 3 weeks, apart from the two things I already have booked. So we'll take some holiday, we'll do a bit of work, do a bit of play. Anyway, I want to get on to the clip now. Thanks for bearing with me while I told you that. Three key things that will absolutely metamorphosize your trading. Now, I don't know what trading strategy you are implementing, if you have one at all, whether it's written down, um, what your approach is. Many of you have heard a little bit about maybe the HVF method. I'm not trying to swing you onto that. You might have your approach. I know how it is. When I was getting to that intermediate phase, I started to harden up on that which I was going to do. I wasn't ready to listen to other people's new methods. I was just looking at tweaking and refining. Maybe you're somewhere sitting in that place and you think, I've got my path to riches all mapped out. This is how I'm going to do it. But I'm open to, a couple of tweaks and a couple of points. So here they come in chronological order. The three things that will make you substantially a better trader if you implement them. That's the only if that's with them. So, number one, reduce the number of trades you place. Reduce the number of trades you place. So, if you're someone who does 30 trades a month, in and out, round trips, approximately. Obviously, it can vary. I'm saying to you, do 10. Lose 2/3 of that which you do. Now, this is shocking, and most of you are going to battle to do this. I do try it for a day, and your psychology and everything will work against you. And just doing this, number one, will prove exceedingly difficult. If you've been trading for any number of years, or even just for months, you already have a pattern that you've developed, and I'm uploading another quite lengthy clip about the brain and how it develops patterns and how it's designed to help you, but how in trading it's counterproductive. It won't feel like work sitting there and doing nothing. What happens when you only do 10 trades instead of 30? Well, if it was 30 a week and you do 10, it feels like you're working a lot less. You feel bored. You lack the patience. So this will develop your patience. You have more time. But one of the best things that should happen is you become more selective. And the minute you become more selective and you need those little prisoners on the back of the wall stripes that you then draw a line through. After you've drawn four, you draw a line through, and you've had done 5 of your 5 trades. You get a whole bunch more selective about them. and that means better quality. So you put more work in per trade on the pre-trade arrangements than you did before when you were doing 30, where you were just tactical and executing in and out. The best part of trading, where the work is really done, is the amount of work you do pre-trade in the analysis. So cut your trades. Number one, cut your trades by 66% in number. Know how many trades you do in a month, so go find that out. Take an average over the last 3 months, 6 months, or however long you might have been trading, and then reduce it by 66%. That is going to prove exceedingly difficult. It's going to test your patience, but what you should fill your time up with is doing more technical research pre-trade and being far more selective. So that's point number one. This will improve you immensely. It's not volume of trades that makes you wealthy. You'll usually find when I do P&L analysis with traders that it's actually one or two key trades that they've done that have contributed 40%, sometimes 60% that they've mined of all their results. So we stand very narrow on our winners. Point number two, what else? Stop putting market orders on. Stop placing market orders. Every entry is to be a pending order entry, whereby you may or may not even be present when it is executed on your behalf. Stop placing. So point number two, stop placing market orders. Stop placing market orders. Rarely, very, very rarely is now, right now, the key moment. Very rarely is right now the key moment. If you're dropping down the time frames and you're watching and you're getting hyper adrenalized by the tick and it's more active because you've slipped down the time frame and you say, that's it, it's taking off now, chase, jump, jump, jump. We are all inherent momentum chasers, and we're waiting for the confirmation of that big move that we wait. And then you see a couple of flicks of a tick which 3 times go on the upside instead of one up, one down, and you think that's it, it's the beginning of the move. Rarely is now the moment. What do? You go up the time frames, you do all your pre-trade, trend, everything else analysis. You do all your key levels of significance analysis, as I've referred to before. What are the key levels that the market has shown that it has respected? And on the takeout of, if you're breakout trading, and even if you're not, if you're trading in another sense, on a certain event, you must have the if statement. If this level run, then buy or sell or whatever the case may be, enter your trade position or view. Now, if you do this, this means many of your entries you may not even be present for, or you may not be observing at, but the reason for entry will be far stronger. Now, combining that with point number one will make it much easier, because you now have something you have to look for and work to do to fill the time up, now that you're only doing 1/3 of the amount of trades you're previously doing. Every entry is a pending entry. Do yourself a favor and count your profitability and your performance on your at market order trading versus your pending order trading, and you will be shocked to see which one is the key ones that turn out to be good things for you. So we've had number one, we've had number two. What is point number three? Point number three ties into many aspects of what I fundamentally believe in. Have a target. Do not exit on a trailing stop. That is a suboptimal exit on the market moving adversely against you. Have a target. Make yourself available for good fortune events by having an order above the price action if you're going long, and one well below the price action if you've gone short. So targets. This allows you, what does giving you a target do? It allows you to calculate before entry, because you're using a pending entry, your full reward to risk ratio. You will know before you are even triggered what your best outcome is in the event of a successful trade. how much you're risking, because you will place your stop contingent on your pending order. So when you place your pending order, as per point number 2, you will also have a contingent stop loss and a contingent target. Every time have a target, every time enter on a pending order. Know your reward to risk ratio in advance of every trade. Know your reward to risk ratio in advance of every trade. By the way, this also makes you available for positive slippage, which is when the market can skip very strongly in your favor and may even gap over your target. A gift that I've received more often than most people will imagine. It also means you spend less time in the market than if you exit on a stop loss, and your line of efficiency, the gradient from your entry point to your exit, is its steepest. So the triangle geometry that you get on your line of efficiency, this is HVF methodology phraseology, so forget it if it means nothing to you, but the line of efficiency is the point at which you enter to when you exit. You want that line to be as steep as possible if you're up, if you're long, or as steep as possible to the downside when you're short. Minimum amount of time in the market, maximum amount of gain. Our methodology is the only one that measures risk reward ratio divided by time. That's the ultimate efficiency. How much juice against how much did you risk and how quickly was it attained? Every time you're in the market, you are on risk. Okay, folks, there they go. Quick recap. Point number 1, what was it? Or cut your trades by 66%. Do 1/3 of the current amount of trading you're doing. You're going to be doing way more work on each individual trade. That's how you're going to fill up the time you're making available for. Number 2, pending order entries, no market order entries. Now is rarely the key moment. And with that pending order, you will also have, point number 3, your pending stop and a pending target. Always have a target. Stick to the target. Let it be run. Forget what happens after that. You've signed a contract for a great set of return. You will know your risk reward, and you are content for getting out on that target and getting delivered that which you are. Remember, you got to leave a little bit in so that there's someone else to take over your trade, and a reason for them to buy as you're selling out your longs, or vice versa to sell as you're buying back your shorts. Okay, guys, there's your 3 points. I hope you found that useful. And to my Australian friends, look forward to seeing you in July. Bye-bye for now.